What's good, yo? You're welcome to day 29 of 120 Days Profitability Challenge, a series in which I'm challenging myself to become a profitable Forex trader within 120 days. I don't know how possible this is going to be, but let's see how it will unfold within the stipulated time. Right, so I've been on a break for a few days now. I've not been checking the chart. I've not been taking lessons because I've been very tired. Honestly, this is not an easy journey, right? I thought it would have been easier than this, but yeah, it's not as I thought, right? So right now, I just have to kind of sacrifice and give it my all and see how it's going to play out, right? So let me just show you something I've been checking out lately. I mean, today actually, something that I check out as a form of revision. Let me take you through right here. Right, so these four things over here, we have imbalance, order flow, order block, and IFC over here. I've written these four things over here because they are more or less related. And if you miss out on one, you find it difficult to understand the other. And yes, they are very important in terms of what I'm studying as well. So I thought it wise to put it out here. Yeah, probably might help me, right? So let's take the first one, which is the imbalance. Imbalance simply means something is not well balanced, okay? Imbalance. Let's say there's a weight over here and there's another weight over here. And this weight is heavier than this one. Probably when you weigh it, all right, and there's a pivotal point over here, this one right here will outweigh the other, will raise the other one up, right? I don't know if you've gotten what I'm trying to say, but let's look at this over here. All right, so imbalance is simply three candlestick formation pattern, right? Whereby there's a gap between the first candle and the third candle. So in our case over here, all right, this is our first candle, second candle, and third candle. So right, if you look at the high of this candle, right, let's mark it out over here. This is the high of this first candle. Now let's go ahead and mark the low of the third candle. This is the low of the third candle. If we mark it across the second candle, there is a gap over here. There's a gap left over here. And this gap is what we call the imbalance. The imbalance. That's what we refer to as the imbalance. So imbalance is simply a gap between two candles, but it is a three candle formation, okay, where there is a gap between the first candle and the third candle, right? Okay, and I hope that is pretty much understandable. Okay, now when it comes to order flow is simply, okay, order flow is in two forms. It can either be a bearish form or bullish form. So when we want to define it in terms of the bullish formation, we will say order flow is a last selling momentum before the move to the upside. That is a bullish move, okay? And when you want to define it in terms of bearish movement, we will say order flow is a last buying momentum before the move to the downside. So yeah, that is it typically, okay? And an interesting thing is that this order flow right here is being refined. If you refine order flow, you are going to get order block from it. That is how come I say these things are related, okay? If you refine order flow, you are going to obtain order block. So it even get to a point you may not even need to even locate order flow. All you need is to locate your order block and you are good to go. And one other interesting thing is that without any imbalance, an order block is not valid. Okay? An order block is not valid. Now let's look at order flow a little bit into detail, right? For you to be able to identify an order flow correctly, you need to learn one thing, and that thing is how to identify valid pullback in the market, right? How to identify valid pullback in the market. I don't know, maybe I've actually taken this lesson long ago before I started the challenge. So I've not talked about identifying these valid and invalid pullbacks in the market. Maybe, yeah, I'll make a video on it and explain it. Just Just in case you want, you can let me know in the comment section and I'll find time to make a video on identifying valid and invalid pullbacks in the market. It's not every move down, up, down that you can find out as a valid pullback. Some of them are invalid, and if you tend to use the invalid one, you may find yourself in trouble, right? So that is it about the order flow, right? So when it comes to order block, okay, order block is okay. There's one thing also I want to establish this fact over here based on what I've studied so far, right? These are coming from like the lessons I've taken and how I understood them in my own way, okay? Yeah, so based on what I've studied, you see, candle color doesn't matter, all right? Candlestick color does not actually matter when you are trying to locate some things on a chart. Okay, so let me talk about order block now. For an order block to be valid, there are two major conditions that have to be met. The first one, an order block, a candle who is to be considered as an order block, has to take out liquidity. It has to take out liquidity from the previous candle. And the second thing, it must have an imbalance. That's how come I said without an imbalance, order block is not valid. So when we are talking about order block taking out liquidity, we are talking about order block taking the particular candle, taking out candlestick's liquidity. Take note of that. Candlestick's liquidity. Not general liquidity, but candlestick's liquidity. So when you say candlestick liquidity, for instance, in the diagram over here, this particular candle over here, it has closed below the low of this candle. So that means it has taken the liquidity resting over here. It has taken this liquidity. Now, we then have to look at this movement from here to the up. Do we have fair value gap? I mean, do we have imbalance? If there's an imbalance, then we can refer to this as what? An order block. So let's see. This is our first candle, second candle, third one, fourth one, right? So if you look at the high of this and the low of the third candle, there is a gap, right? The gap present over here made it for this particular candle to be considered an order block. So we can mark it out on our chart, right? If you're using a rectangular tool on your trading view or MT4 or MT5, you can just mark it as OB, right? OB for order block, right? So that is it. The first thing is the candlestick must take out liquidity. That's by taking out the low of the previous candle. This, if we were to be in a bullish case, then it must take out the high of the previous candle. I hope you do understand that for me, right? Before it creates an imbalance. So without an imbalance, we cannot consider a candle as, so without an imbalance, we cannot have an order block, okay? Now let's talk about IFC. For the IFC to similar concept apply, it must also take out liquidity and there must be a presence of fair value gap. But the form of liquidity that IFC candle has to take out is not the same as the liquidity that order block has to take out, right? So when you look at order block is just a single candle. But when it comes to IFC is like a group of candles, okay? A group of candles. So instead of this one taking out candlestick liquidity, it's rather have to take structural liquidity, okay? I couldn't draw it over here, so I just wrote over here structural low, meaning when price move, let's say up, down, okay, this is a low. Then price move, then come down over here. Then it took out the low over here. Then we see another move up. So in the move over here, that is what we are going to look for our IFC. And most IFC, they mostly come in what we usually know as this hammer, doji, and stuff like that. So in short, they have long wicks and a short body, okay? IFC, we mostly see them with long wicks and short body. And there must be presence of what? An imbalance. So when you look at this candle, this one, this is our third one, second one, first one. So there is a gap between the first candle and the third candle, meaning we have an imbalance. Okay, we have an imbalance. So with the presence of the imbalance, we now have, or we cannot consider this over here as an IFC because it took out the structural load. That is the structural liquidity it has taken. All right. Yeah, so that is it. And I hope you've also taken some lesson from this video. And I'll see you in the next one. And if you are new over here, my name is Godsway. I'm on a challenge to become a profitable Forex trader within 120 days. So yeah, you can follow me on this journey and let's see how everything is going to unfold with time. So go ahead and hit that subscribe button and become part of this family. You're welcome.